Hello traders, Gary Wagner here. Just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Tuesday, 27th day of June 2017, and this is the Daily Report for Gold and Silver. We do have fractionally higher pricing in the precious metals markets, specifically gold and silver. Platinum also, with palladium trading lower on the day. Gold is currently up, basis the most active August futures contract, by $1.10, trading at $1247.50. It is traded to a high today of $1253.80, and the low on the day has been $1241.80. Silver also trading higher, but in terms of percentage gain, much stronger currently than gold. Currently up about 5.5 cents, trading at $16.62. It's traded to a high of 72 on the day and the low 16.49. So traders, although gold is trading higher on the day, currently well off of the highs, but still trading in positive territory, up about $1.10. The first chart that we're going to look at today is a simple bar chart, and this bar chart is of the U.S. dollar index. U.S. dollar index, as I said, is under tremendous pressure today, losing a full percentage point as it traded from this high just around 97.15 to a low of about 9,600. You can see that right here. You can also see this hash mark on the right as where it is currently trading at, which is absolutely much closer to the lows than the high. As a direct result, of course, that has propped up gold. And now on the top, we do have a daily bar chart, this of gold. And you can see that we are really unchanged on the day to fractionally higher. You can see the hash marks here. You can also see these highs that were achieved earlier in trading. And there's absolutely no doubt, but this market continues to really settle since a single trade order of 1.8 million ounces really rattled the market Monday overseas. Now, whether that trade was put in accidentally, which I find kind of perplexing and hard to digest, or intentional without the understanding of the net effect it would have putting that kind of volume in. The fact of the matter is that single order moved the market, and the market itself is still attempting to recover from that. And that, of course, takes us to our weekly candlestick chart of gold, this being the most active futures contract, or August gold right now. Our current price is in a pretty critical area. We're trading right now at about $47.50. And to me, the key is going to be having the price point sustain itself above this 61% retracement. Because as you know, to me, that as well as the 200-day moving average, which I'll have to put up, is kind of been our line in the sand in determining whether or not what we're experiencing is a continuation of a high followed by a low, and then a higher high, and then a higher low, a slightly higher high here. Although when we look at it on a weekly chart, that's not the case. When we look at the intra-week high, it is, and then we would hopefully get a higher low once again. So we've had a series of higher lows, we've had a series of higher highs, and now it's a matter of whether or not that trend will continue in this next short-term period. And traders, lastly, I do want to look at our daily candlestick chart to look at key areas that we need to really keep our eye on. The first real area, of course, is going to be our 200-day moving average. That is this dashed blue line, which currently is at 1239.70. Of course, the 61% retracement of the last rally, that's its 1246. And lastly, our 50-day moving average, which is currently at 1258. And in regards to those numbers, it's quite obvious that our stop is below the 200-day moving average, and it should be kept right there. Our current close is above the 61% retracement. I would like to see trading basically form support in this area and move higher, and a breakout to the upside would only be confirmed if gold began to trade above the 50-day moving average. In other markets that we follow, the big news today is really a dramatic sell-off in the dollar index. currently trading off by a full percentage point, 97 points lower at 96.14. Low on the day, 96.04, and the high, 97.15. Of course, we have seen dramatic pressure across the board in U.S. equities, with the Dow Jones Industrial Average giving up almost 100 points, down 98 points at 21,310. Standard & Poor's giving up about 0.8% at 2419. And then lastly, the composite index, NASDAQ composite index, selling off in terms of percentages to the greatest extent, off over 1.5%, trading off by 97 points at 6,150. And traders, in terms of some of the outside markets that we have been looking at closely, the dollar took a tremendous hit today. At its worst, trading well over a full percentage point lower, currently trading off by about 0.96 to be exact, 93 points lower at 96.18. It did trade to a low today of just about 96. The low that came in was 96.04. So we can certainly see that we had some tremendous pressure. But more importantly than that, we have been talking about the fact that the dollar has been trading in a consolidated, very tight trading range in which prices have been oscillating between about 97.50 on the high side, and on the low side has been about 96.50. Let me put a line in and you can see what I'm talking about. These series of lows that came in, but you can see the real bodies. In other words, where the market opened to where the market closed was well confined within this narrowly defined range. We certainly broke to the downside with today's activity today. We can see that in the commodity channel index as well as the Williams percent R. And traders, one of the other markets that fell pretty dynamically today is the NASDAQ Composite Index, that tech-heavy index, which lost about a full 1.5%, actually a little bit over 1.5%, trading at 61.50. We really can see that over the last, call it 2 weeks, we can define the trading range as a narrowly defined trading range. I'm kind of illustrating that in yellow. 61.50 on the low side. On the high side, we had 62.50 with one little blip up to 6,300. But we certainly now have traded to the lower end of that spectrum. We haven't really hit these lows at 6,100, and that is where I am currently putting tentative support at. Traders, there can be no doubt, but the dust is just beginning to settle after the trading tobacco that occurred Sunday here in Hawaii as well as the mainland, of course, Monday overseas. This really started in London right on the opening bell within 9:01 London time. The market was trading dramatically lower to recover a little bit, or stabilize, I should say, but we are still under the pressures of that particular single trade. On top of that, we have this incredibly strong tailwind being provided by the U.S. dollar, giving gold a full percentage point gain. And as you can see with the board up $1, it is not fully compensating for that. In other words, gold trading is actually lower when we take the dollar out of the mix. So I am hoping to see some stabilization in pricing, a base continuing to form after reaching the lows that were achieved last week and bouncing off of those, only to give that back in a single day. And now it seems as though it's time to slowly recover from that. Therefore, my recommendation is obviously to maintain your current long position and to maintain your current stop where it is. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.